bad joke. Dropped at the first sign of trouble. They're only as good as the world allows them to be. I'll show you. When the chips are down, these civilized people, they'll eat each other. See, I'm not a monster. I'm just ahead of the curve.
What is going on YouTube? It's Brendan from Market Makers. Hope everybody had a fantastic weekend. Happy Tuesday, everybody. We're about an hour from market close here Eastern time. So I want to give you an update on the market, the VIX, the DXY, the indices. We're also going to add the Japanese index here by popular request, as well as some individual equities and, of course, the metals and Bitcoin. So lots going on in the market, guys. If you watch any financial news, most of the mainstream media is talking about a new bull market, right? The job numbers that are coming in are still really strong, even though unemployment went from 3.4 to 3.7. Remember, unemployment's lagging. Unemployment spikes when the recession hits, but we're adding a lot of jobs, even though granted they're lower paying jobs, hospitality jobs, things like that. But the bullish narrative is this is a new bull market driven by the market leaders, big tech, and the rest of the market is going to follow. So what we have in actuality is a bifurcated market. You have 10 stocks essentially responsible for all the gains in the S&P this year, whereas if you take those 10 stocks out, and really I think it's 7 or 8, if you take those 7 or 8 stocks out, the S&P's up 1% for the year. We have record shorts on the market going back to September 2007. Lee, throw up that chart. We have shorts, major shorts on treasuries as well as bonds. Lee, throw up those charts as well. So big money is positioning, hedging, positioning, whatever you want to call it, but it's record shorts back to September 2007. They're positioning for a downturn, whereas dumb money, which is a lot of retail, is going long. So somebody's going to break one direction or the other. And we got to look at some charts here to see what the charts are telling us about which way the price is going. Let's start off with the VIX, guys. These videos, by the way, guys, if you want to come trade with us, come hang out with us, come hang out with a community of 13,000 traders. This is our 2-year anniversary of our Discord with 13,000 people on our Discord. We do live streams, TA, trade signals. Fantastic community. Come check it out. Your first month is free if you want to check out SimpleFX, where you can trade on a decentralized exchange, or BingX for traditional crypto platform. All that information is in the video description. You can message Lee in Telegram after you download one of the 2 apps, and I'll pin it as well in the YouTube comment section. Let's start off on the VIX. All right, guys. So a couple of key lines here we got to look at here on the VIX. So the white line, 1634. This was the VIX. VIX is low. Remember, this is an inverse. This is an inverse to the S&P, right? So low VIX in a bull market, prices continue to go up. Low VIX in a bear market is a market top. But at the market top in January 4th, 2022, the VIX was at 16.34. You're below where the S&P was at its all-time high now. You're at 14.05. You see that? And the VIX is continuing to drop. So here's the key thing I want to show you on the VIX. Now, again, this is going to have to go with your narrative. I believe we are in a bear market with all the leading economic indicators, the yield curve inversion, everything telling you that a recession is incoming. Other people believe you're transitioning into a bull market. But I want to show you this because your market narrative really matters how you view the market. Let's just throw the caterpillar on here. Okay, so we're hitting 2 standard deviations now from the mean. Let's go ahead and back this up because this orange line that I highlighted at 14.14, which we're below now at 14.04. Last time you got below this, let's go ahead and throw this on a 3-day chart, really condense this a little bit. This was all the way back here. Maybe a daily chart will work better. It's a little jumbled. All right. Let's take this off. All right. So all the way back here. Look where you were July 21. Now we're below this now. That's the only time you hit this. So let's go back to the time before that, before you started having these spikes in the bear market. The last time you got this low, I mean, this is kind of incredible. The last time you got this low, I mean, look, look at the spike in the VIX, was February 2020. Anybody remember what happened in March of 2020? Yes, that would be the pandemic. That would be the VIX at 85. So you see the orange line down here? That's the last time you were this low on the VIX. That is crazy momentum, crazy volatility of strong momentum to the downside for VIX dropping right now. And the S&P is nowhere near its all-time high, which you passed that line. So this is really interesting to see how this is developing. Juxtapose this with the DXY, which is a nice pump up. We gave you this target 103.917. You're holding it at the 618 for support. The next target is the reciprocal move off this low, which is 105.851. So if you think about it, you have the VIX dropping, right? Very strong complacency. This market doesn't give a F about anything. Doesn't care about the conflict, doesn't care about the fact that inflation is not tamed, that we may still get a rate hike, which is no longer baked into the mid-June meeting because it's less than 25% of market participants think that you're getting a rate hike. They think it's a pause. Lots of conflicting views here in the marketplace, and the AI mega bubble that has formed as well, driving the whole market up when the market would be flat like the equal weight for the year. So this is your next target. So you're going to have, this is such a unique situation where you're having the dollar rise if it continues to hold this support and move up, okay? You're having the dollar rise again, bearish for stocks, bearish for cryptos. You have the VIX dropping, and let's see what's happening with Bitcoin. And the market looks like it's at a strong, near a strong top at least. But let's go ahead and look at Bitcoin. Bitcoin on the 3-day chart, guys. So Bitcoin on the 3-day chart, you can see this. So we're almost oversold here on Bitcoin, and we've just been making this series of higher lows, right? And I told you what I think is going to happen with Bitcoin. You got up above Wyckoff, and you're rolling over. These smaller movements don't matter. I'm looking at this retracement back up. I think Bitcoin's going to do a massive double top before it breaks down. So having said that, what level am I really looking at here on Bitcoin? I'm looking at the 786 at 29,825. The 618 is at 28,870. So basically between 28,870 and 30K, I'm looking for Bitcoin, which is pumping back up because it's holding this 25,459 as support right here. It's pumping back up. It's almost oversold. I want to see it get up to one of these two levels and make this shape. Okay. Then you have this large double top structure. So what will this look like on the daily? Let's go ahead and take a look at the daily, look at some of the indicators here as well. Go ahead and put this back here. Daily, you can see that you're getting some strength. You're back across the median line, back in the bullish territory on your money flow. And you can see you bounced right off of that level. We gave you 25,459. So we'll see if this little move up can continue, because our two previous trades we did, we shorted this up here, shorted this right here. These are 13 and 20% drops from that high down to the low. Okay. So these are really, really nice trades. This is why trading Bitcoin is a lot of fun. You have the 200 curling up beautifully. But I do think with the market conditions, guys, this is what's going to happen. You're going to get potentially a larger move back up and then roll over when you zoom out to the larger time frame. So that's one to watch. Make sure you can hold 25,459. If you start losing that, you are journeying back inside our Wyckoff trading range. Let's go ahead and zoom this out. Here's your 3-day chart. So if you lose this 24, let's just call it 25K. If you lose the 25K, you're coming back down to your 618 at 23,943. So you want to see this hold and you want to see this bounce up, okay? You want to see it bounce up. Now, let's look at, are these markets going to be in a new bull run? So last week we passed a milestone, 150 days off of our bottom, okay, our October lows. So going back 30 years in the marketplace, after 150 days, the average amount of stocks above their 200-day moving average is 70%. We're talking about market breadth here. 70% of the S&P after 150 days in a bull run for 30 years is above its 200-day. The lowest you can find in the last 30 years is 56%. Let's just see where we are looking at the 200 here. Let's check out 48%. So we did have a nice little move up back to the median line. 48% of the stocks in the S&P are above the 200. So if this was going to be a new bull run, this would be the lowest. This would be an unprecedented bull run, the lowest amount of participation ever in the stock market. See, what you want to have is you want to have the market rising up and the market leaders, whether it's tech, whether it's industrials, whatever it is, cyclicals, doesn't matter. You want to have that broaden out. Okay. Now, traditionally off these rallies, you've had tech leading, but you want to have it broaden out, lift the whole market. What happens is if you stretch the rubber band of big tech just shooting up and everything else just kind of drifts up with it a little bit, but doesn't expand, the rally fails, hence a bear market rally. Is this a really nice rally? Yes, it's a great rally. When you measure this rally coming off of the low here up to your high, 23.23%. Okay, that's a nice move. Back in .com, you had 6 rallies over 20%. There's nothing unprecedented about this move. And of course, the NASDAQ rallied even better, up, I think, over 37%. We'll check that chart out in a second. So nothing unprecedented about this. When I look at this from the technical perspective, we have our August 2022 high up here at what, 43.25. And what we have here off my trend-based fib, I utilize this with closes, not highs and lows, but with closes. Look at the one fib at 42.90, okay? And that's where we got to, 42.90, very close to your high here, over here from your August 2022. So will this hold and get a significant retracement back down, which at a minimum, I would expect to come back and retest the base of Wyckoff, which you tried to do here and you just fell through it, okay? So I'll be looking at a move like this coming back down even to the 786 or just above, and then it's that pivot out that's going to determine the next move in the marketplace. If you don't get that pivot and you either just die like you did here, or you do something that's much more common in the equity markets is you come down, you retrace to like the 618, 786, and you make a double top and you start breaking down. You see this over and over in the marketplace, okay? So this right here, if this holds, we want to see the distribution really start to take place. Let's put this on a daily time frame. Actually, let's look at the money flow. Money flow is basically at the median line. Volume peaked up and is kind of pulling off. You had your pull up here on the 200-day up to the 48% level. Now it's flattening out. So again, the rally looks like it's running out of steam. Is there more upside? Of course, anything can happen. Okay, trading's about probabilities, not possibilities. Anything's possible. It's possible a nuclear war breaks out tomorrow and everything dumps. Doesn't mean it's probable. Okay, so this is what I'm looking at here. Let's look at the daily. Going to the daily here. Daily time frame, guys. I want to see what the indicators are doing here. Money flows returning back down to that median line. Not overbought here at all. Your volume ratio is still bearish, right? It's basically back at the median line. So again, the average stock is going down. Okay, the average stock is going down. The mega cap tech stocks have been moving up and holding the market up. So let's look at a couple more breadth measurements. That's the 200. You're at 48%. Let's just see if the 50 is improving. Okay, let's check out the 50. The 50 is at 47%. So basically, the 200 and the 50, you have more companies below that moving average, those two moving averages, than you have above. Again, gives you tops and market breadth, okay? And let's go ahead and look at a couple more things here. Anything else I want to talk about? So if we did break out to the upside, what would those targets be? Well, your immediate target would be your August high from 2022, 43.25. You're at 42.82. And what you see a lot of people who are discovering fibs for the first time on YouTube, I've seen so many people doing this. Everybody's doing this now, right? Let's get the all-time high. All-time high right here, January 4th, and go down to the October low. And they're like, look, we're right at the 618. Look, you hit it right here, So that's 43.11. So you see a lot of people saying that, okay? But again, that's that same corridor, 42.90, 43.11. And you want to see if this holds up. If you start building this distribution box, if this starts breaking down, like as you can see on the daily time frame, we're going to look at the pivot pattern too, guys, because we haven't looked at that in a while. We'll do that next. And that's what I'm looking at here, guys. I'm in a short on the S&P. I'm expecting a retracement. I want to see if this does come up a little bit more to that 618 or if it just starts breaking down from here. So it's something I'm watching closely. And let's look at the pivot pattern. Lots of people ask questions about the pivot pattern. So quick refresher, going back to June of 2022. This pattern of 43 bars, roughly 61 days, there's holidays and things mixed in here, market holidays, but this pattern has nailed the exact bottom to the candle, the exact top to the candle, the exact bottom to the candle, the exact top to the candle, close to the exact top, and then we had this mess that we have going on right now. So does that mean the pattern is invalidated? Well, again, it's just a pattern, guys. Now, what I see happening here, because that last trade I shared with you based off this pivot was a 9% drop in the S&P. We hit our pivot here and we have two drops of 3.5% roughly. So you basically got a set, which we traded both of these, by the way, in the room, and we talked about it on the channel. You got two 3.5% drops, and now you move back up, right? What I'm looking at, obviously, this pattern was calling for a June 14th bottom. That date is rapidly approaching. This pattern was calling for a June 14th bottom, basically repeating the exact same cycle we had last year, where we hit a bottom in June, rallied up to August. And right now, the way this is panning out, this could easily be the June 14th. This could end up being your pivot top. And you can see that because you're on the daily candle here, June 6th, right? So you're out 8 days. What else lines up June 13th, June 14th? That would be the next FOMC meeting where they may or may not raise rates, where Powell may or may not be very hawkish. So that's going to be very interesting to watch. That's that same date, okay? That's the actual date that he announces the rate hike. He does his question and answer. So this is the next pivot point in the pattern. We did not get much retracement here, a couple 3.5% moves, which we traded, and now we broke out to the upside. So again, this is just a pattern that I'm watching, but because the pattern, to me as a pattern trader, has been so beneficial in nailing key market moves. Again, not every single exact top or bottom, but most of them, almost all of them, except these current two pivots, okay? All of them. So that's what I'm looking at here to see if this holds up. But if we just go sideways or up and down 20, 30 points and go sideways, June 14th looks like it's your next pivot, okay? Now, this is based off a 43 bar, 61 day pivot pattern. But of course, other people just view it like, well, yeah, that's the FOMC meeting. Of course, it's a pivot. Right. But we've had the pivot pattern for months, and this is just how it lines up. So if this is a top and then comes down to the bottom, if the pattern is still valid, meaning the pivots still have any value, then your bottom would be August 14th. Okay. So that's where this would flip flop. Had these small drops, came up, this could be a pivot top coming down to your pivot bottom. But again, it's a pattern and we're watching how it plays out. You do this in confluence with Fibonacci, with your own market view, with the different things, patterns, and shapes that take place in the marketplace. Let's look at the NASDAQ. NASDAQ, there's a bunch of ways you could lay out Wyckoff here on the daily, guys. So, I mean, I laid it out the traditional way here, but this was such a volatile move here in NASDAQ. What I want to show you is a couple of things. So again, what most people do with Fibonacci is they would simply grab the all-time high for the NASDAQ, okay? They pull it down to their market low. Let's go ahead and get the market low. There we go. And they say, look, the 618, they just discovered how Fibonacci retracements work. Like, we got to the 618. This is a good area to retrace. Oops, well, we're a couple hundred points above it. The 618 here is 14,348. You're at 14,566. If you understand impulse moves, see, you have to understand Wall Street and people that really don't study Fibonacci. There's some great books on Fibonacci. Most of them are garbage, okay? But people that really don't don't study it, they don't understand the nature of Fibonacci, impulsive moves. You have to understand how markets move in waves. The way I would measure this on the NASDAQ, you can pull the same thing from the all-time high. Okay, there's different techniques of using closes only, like a line chart. What I would do is I would measure this impulsive move down. Okay, I would look at this impulsive move down. Now look where your 618 is, 14,581. So your 14,581 is right where price is, 14,563. And then I would look for a Fibonacci confluence. If I'm going to measure this wave, well, we have deeper retracements here. Yes, but we had our massive, what was this rally? 20%, 25%? Let me look at it. So we had this rally here of 24%, okay? That was that August rally. Yeah, August 2022. So now what I would do is I would take another fib retracement and then go down to the low. And then look where your 1272 is, stacked right on top of the 618. 14,619. Not all Fibonacci retracements have the same value, okay? But your 618 is right where it should be if you utilize Fibonacci subjectively, trading along the wave principles, the law of three, the market moving in threes. This is where I get my fib retracement at, okay? 14,581. So this is a key retracement level. Let's look at some things here on the daily. So looking at this on the daily time frame, NASDAQ breadth above the 20. This got up to 70%. But again, you're at 99% over here. It's just 99% of the market. Now you're at 70%. You have divergence of breadth after this big rise up because, again, it's the mega cap tech stocks pulling the market up. And if we go ahead and pop this out to, let's just go ahead and bounce this to the 200 and look at this real quick. 200, you are at 71% in the NASDAQ. Remember, NASDAQ's only 100 companies. So this is a key area of resistance. And obviously your next key resistance area up here utilizing this impulse method is way higher up. It's 15,544. Looking at your MFI, you didn't quite get overbought on the daily, but you don't often get overbought, as you can see on the MFI. You did at the all-time high, and you haven't since. So this area, we'll see if this holds up, get some wicks up and down, wicks up and down. The longer it stays in this area, I think the bias is going to be to build a distribution box. So you want to watch that, okay? That's an area you definitely want to watch. And you can see we played out a textbook Wyckoff here, where you had your breakout, your failed pivot, price return, your down thrust below the range, back up, and then here's your Livermore pivot, right? You made your cup, and then you shot back up. So that's where you're at your 618. And if you want to do a projection again, you can line everything up, and that would be your 1272 as well. You can go ahead and do a trend-based fib projection, and you can do it this way as well. So lots of different ways you can do Fibonacci, guys, to check out your key levels. There's your other 1272. Point being, there's a cluster of fibs in this region, okay? Not down to the dollar where they're laying on top of each other, but all within 100, 200 points of each other. And, the ATR and the NASDAQ, you're looking at, you can move 200 points in a day. So, I mean, they're all within an ATR of each other in this region. So this is just an area to watch to see if it holds up. If you start getting some retracements, which I don't see anything happening at the moment, nothing major at the time. We got to open this up and get some lower levels, 382, 486. You're looking at substantially lower retracements just from this impulse up. And if you want to tighten this up, go to that next level. 14,239, 14,114, 13,963. Okay. But what you're doing now in the daily time frame, you want to see if you're building a top. Let's go ahead and look at the Russell. Russell, we haven't covered in a while. This was that last trade that I shared in the Discord. Talked about it here on YouTube. Got a nice, 15, 18% drop here in the Russell. Reciprocal geometric pattern. And now what I see the Russell doing is it's trying to exit its Wyckoff range. So we go ahead and throw this like this. So you have the Wyckoff steps that you do, and now you broke through the upside. Here's your 200-day moving average. And what you're looking for is resistance to come back down to try to hold your base, which would be on the 200 on the Wyckoff ceiling, build your Livermore pivot and come to the upside. So where is that resistance, right? That's the key here. Where's that resistance? If we do a fib projection, the 1618 is at 1893. So let's call it 1900. So I want to see if the Russell comes up to 1900, holds this, returns back down. It could stop 1852, most likely coming back down, and then does this move, and then that's your breakout above 1900 if the Russell were to go bullish. If it doesn't go bullish, then it's just going to make a double top, failed breakout, something like this, come back up, retrace, and fall back into the range, okay? So that's what you're looking at there on the Russell. Russell is the broader economy, guys. The economy is not 7 stocks. The Russell 2000, you could expand it to the Russell 3000. Out of the Russell 3000, half the stocks are still below their October low. So the economy itself is not as healthy as the stock market. The stock market and economy are not necessarily the same thing because a lot of people are simply trading price action in the stock market, not caring about the underlying fundamentals, which is totally fine as long as you can be a successful trader and make money. My philosophy is, guys, do anything that makes you money in the market. Whatever strategy you have, you want to draw imaginary lines up in the air and trade that way, do that if it makes you money. That's what I do, okay? I just want to make money in the marketplace. So let's look at this on the DAX. DAX, again, not doing a whole lot, guys. Here's your Wyckoff top. We got that retracement to 16.1 that we talked about. This is a daily chart. We did retest it, did fall back down a couple hundred points. Now it's coming back up. Area I really like the DAX better at is at 16.2 if this was to come back up. And again, what am I just looking at here, guys? Just looking at a massive double top, okay? Because again, with the recession incoming, with the fact that markets never bottom ahead of a recession ever in market history, it's a powerful thing to understand, okay? Doesn't mean you can't have higher price moves, but you got to understand where the market's going, not just where it is. If you're only reactive, then you're always late, which is missing the big move, okay? You have to be predictive of understanding market history and market analytics. Let's look at the CAC. CAC, this was my very, very proud of nailing this trade, as I mention all the time. But here's your big Wyckoff on the 3-day chart, right? And again, here's your pivot. Here's your Livermore pivot. Livermore pivot came back, tested your base of Wyckoff, and then you kind of rolled up, and now you're just making lower highs, lower highs. This looks like the Bitcoin chart, doesn't it? So you're looking at the CAC. It did make a new all-time high, but you're looking at this and it looks really weak and it's falling apart, okay? But when we measure this with fibs, we'll take it from the May 19th candle. I want to see the CAC come back up to 74.35. It gave you that re-entry point at 7,500, had a nice drop all the way down to 7,000, 7,100 off of that 7,500 re-entry point. Okay, I also gave you the top here, but this is just bouncing back up. I really want to see it get up to 786 at 74.35 because if you do that, if you do get up to 74.35, looking at what the CAC is doing here, you basically have what you could call a left shoulder. This is a 3-day chart. You have a head. You could call this a right shoulder here, but you would have just another structure like that, okay? And you're going to have a neckline. If this breaks, everything would be coming back down in. Now, the ECB is, Christine Lagarde is hinting with a veil, basically, essentially hinting that they're going to keep raising. She's not happy with inflation. In the US, guys, PCE, I forgot to mention this, but since we're going to jump to some individual stocks after we cover the Japanese index, in the US, the PCE, which is what the Fed uses, this got lost in the news with the big rally, I guess a Friday ago. It's got lost in the news, but the PCE came in hotter than expected. This is what the Fed uses. For 14 months now, we've had the PCE above 4.6, 4.6 to 5.0 for the last 14 months. So they've made zero progress on their core inflation. Okay, that's what the Fed looks at. They take out food, they take out energy. By the way, Walmart and Costco came out and said food inflation, which are two huge grocers, food inflation has averaged 20% the last 2 years. So they got the Fed telling you inflation's at 4.9% in America. Two of the largest food retailers in the country telling you food inflation is really 20%. That's just a disconnect. And every average American realizes that when they pay for their grocery bills. So in my opinion, the Fed needs to keep raising rates. They're at a neutral rate. The Fed funds is 5%. Inflation is roughly 5%, 4.95. You're at a neutral rate. You're not restrictive. You want to be at least above 6%. So I think they should raise rates. I think Powell should be hawkish. Does that translate to Powell raising rates and being hawkish? That I do not know, guys. I mean, he's a political animal as well. They're trying to navigate a soft landing, which has how many times has that been done in history? Anyone? Bueller? Zero times. Zero times. Zero times have we had a bull market with this few stocks above the 50, above the 200-day moving average, 150 days in, and zero times have we had a soft landing. Zero times have we avoided a recession with the leading economic indicators displaying the way that we are. Okay. So everything is pointing to recession. Everything's pointing to bear market rally. Everybody can have their own viewpoint, but that's what I think is happening in the marketplace, guys. Let's go ahead and look at the Japanese index because you juxtapose that with the CAC, and this is a beautiful 2-year plus Wyckoff accumulation event, February of 21. Look at this thing all over the place. So I actually have never traded this index, but this is really interesting to watch this. So you have on the daily chart, guys, let's just break this out some. The daily chart, you exited your Wyckoff, you got your pivot, your double bottom even, and now you're jumping up. So the key again is where is that going to? So let's go ahead and pull this and see what we can get here on a fib projection. If we come all the way down to where this started, I like it better here if we do it from here, looking at this on the daily and move this way, go like this. This is a fib projection because I'm looking at this impulse move, right? You have this bottom and you have the higher low, and then you have your impulse up to the upside, go sideways a minute, make another double bottom and pivot out. So this looks like it makes more sense to me. 1272 at 32,681, 1618 at 34,377. So you want to see if this area holds 32,681 because if it does, you can get a retracement back down here and try to put in another bullish pattern, a low, a higher low, and come back up to that 1618, 34,377. So this will be interesting to watch. This is something I'm going to keep my eye on, and I do believe this is available to trade as well on SimpleFX, guys. Like I said, I haven't traded it yet myself, but it's presenting a very interesting pattern here. So this is on top of Wyckoff. We'll see if this holds up. If it doesn't, then your next target is at 34,377. Japanese index here is really looking bullish. You know, they suffered mightily in 1989, the largest equity bubble, land bubble, and it took them till very recently. This chart doesn't go back that far because it's a CFD chart, but it took them till very recently to finally break that all-time high they set in 1989. That's how long it's been. That's how devastating bubbles can be. So watch these levels as well. Let's look at Tesla, guys. Tesla is approaching that 223 of the 618, as you can see. Now you're at 221.79. This is something you have to be very careful with because Tesla is very volatile. It's volatile, and we have a lot of movement in the markets. Is NASDAQ's up spot 14%, but Tesla is moving up. Okay, so you want to watch this because the 618 is at 223, 786 is much higher. It's at 243. So $20 difference. But I watch to see if you get resistance up here and start building some type of top. This also lines you up with this cluster of candles. So right here, 223, you can see your beautiful macro double bottom structure that you have here. And that reciprocal move, by the way, would put you up at 268. If this were to stay bullish and continue to climb, you'd be looking at a move to 268 for a reciprocal geometric move. So these levels are really key to watch. Do I think it can get there? Again, anything's possible. What I do know is that we had a fantastic short here. Down here at 208, that gave us a 27% drop, okay, from a trade that I shared with you guys. So this is much higher than the original short entry, which gave us a nice drop as well. So I'm just watching this to see if you stack some candles. You know, when in doubt, be patient because if you just short on a candle, hard to see what's happening. You want to see the market, specifically the NASDAQ, the S&P hold tops. If they break out more to the upside and start moving up, you could obviously see this continue its journey. But watch 223 on Tesla, see if it holds up. Let's look at our indicators real quick. Very close to overbought here on the daily time frame. Still have good volume here on Tesla as well. Let's check out Google. Google, I gave you that target of the 1618 at 126.48. Oh, the market, yeah, post market. 126.48, you can see we got above this. When you look at the indicators, Google's entering overbought range here on the daily time frame. Lots of volume though still on Google, part of the AI bubble. Okay, so you're just watching to see if this tops out. You can see the supply getting dumped on these individual candles. This is a 3-day chart. Let's look at the daily. Daily, you got a little bit of a double bottom structure here as well. So we'll see where Google wants to go. It's currently just sitting in this range, the 126, 127, almost 128, and you did get overbought on the daily. You see that? So you got overbought, and now you're building some divergence. You have lower highs in your MFI, higher highs in price. This can take time to develop, but I watch this range as well for Google. Amazon on the 3-day chart about to hit overbought, which means it probably got overbought in the daily. We'll check. But double bottom structure, once again, you see the double bottom, low, higher low, spring up. Well, you're at 126, 129, spot 55 is a 1272. You want to watch that. And then, of course, your 1618 at 140. Let's look at this on the daily, though. Daily time frame, you did get overbought much earlier, and now you're just making lower highs in the MFI, higher highs in price. Once again, building bearish divergence. Again, can take time to develop, guys. So you're starting to see bearish divergence on the mega cap techs. Look at Apple. Apple came out with their $3,500, I guess, VR headset. I don't know what they're calling it, augmented reality, whatever you guys want to call it. But basically, it allows you to send 6 different types of pregnant man emojis and 3D is how I look at it, coming from Apple. But look at this. So you had Apple make a new all-time high. Briefly, it made a new all-time high. It's back below it, but you got this spike up. What is this doing here on the MFI? So you were overbought here on the MFI, and you just kept moving up, moving up. So you have to watch Apple here to see if it's building this range. And to me, this looks like more of a blow-off top candle here because you made your new all-time high. Look at it on the daily. Had a lot of supply dump, came back down. So you're going to be starting to form a Wyckoff trading range, which will make you go sideways, either make a bearish shape or potentially break out to the upside to your 1618 at 196.47. Again, it's all going to depend on how the market wants to break, guys. If the market wants to break out to the upside, more bulls coming into the market, or if the big money laying out their bets on the puts going down, or like I said, the largest amount of puts in the market since September of 2007, looking for a big retracement in the marketplace. I'm looking for a retracement in the marketplace. Palantir got up above the 1618, which was the high range here of 1482. I told you I'm interested in Palantir, but up towards that north of 15. And you're still getting a lot of momentum in Palantir and a lot of volume. You got overbought here on the daily chart. And then price still rose. So you have bearish divergence on your MFI, just like you do on the mega cap tech. This is not a mega cap tech. This is a meme stock, okay? Not profitable, but it is boosting up here. Retail likes this stock. So I want to see this roll and make a top. You have time for this stuff because you got to see the indices hold up as well. Where'd the market finish up at? 42.87 on the S&P. Looking at gold, lots of people asking me questions. Again, this is where we traded it, north of 2058. So this is where we traded gold and it came back down. You're testing the base of your Wyckoff. Gold stacking candles left and right, guys. Here on a 3-day chart, you've tested this multiple candles. These are 3-day candles. 1981 still proves the base of Wyckoff to be very strong resistance. But what I'm looking for specifically on gold is gold, just like with Bitcoin, to come up and give us some type of double top structure, okay? And for me, that's like 2038, 2032. Watch that area in gold if it does come back up and fails, okay? Even better if it gets a spike up here above that 2058. Because as you guys know, going back for 2 years, these spikes have given you major downside trades, but you only get one. And we got our one spike and we got this move. And I told you before, this is a move I'm looking for gold to do now is the previous double top structure. Here's your spike right here. Got your spike, got your spike. Got your sell off to a base and then a rally back up and then you capitulate it. Here's your spike, sell off to a base, looking for the rally back up and then the capitulation, okay? Gold, silver, they will have their heyday, but if it repeats the GFC cycle, it's going to be little bit further down, guys. It'll recover faster than the equities, but it will sell off. And you can see it in the volume. Look at the volume required here to get this movement, and you have low volume here, okay? You will see it in the volume, but if this thing capitulates, you will see it pick back up when it comes down to a base. And we'll go over those targets again in future videos, because right now you're just stacking candles for multiple days. Silver, same thing, 2-year trend line for silver, kind of the same thing. We don't have that 2058 style spike, but we have this 2-year trend line, get some wicks above it, and it keeps capitulating. We had our breakout, formed our double top, shorted it at 26, fell all the way down to 22.77, and now you're just doing a little bit of a rebound, 23.99, back below your 2-year trend line. I would love to see silver come back up with any type of veracity to 618 at 24.81 or 25.39 to 786, but you may have already got this move because you got the double top, and you got the double top here, okay? But if you can make this larger macro double top, that would be great, but you don't need it because you do have a shoulder ahead. And if this comes up and just starts doing this, then you have a head and shoulders pattern. And if silver breaks down, that's your capitulation event for silver, repeating the GFC cycle. All right, guys, long video, how to get everybody caught up. I need some energy drink. I am tired. Next video will be out Thursday, guys. So look for the Thursday market update. Enjoy. I will answer your comments as always. Guys, check out our Discord, like and subscribe to the channel if you enjoy this content. Talk to everybody Thursday. Take care.